Well, it has been, as mentioned, a pretty big day and not a great day for the markets. Let's check in with our business editor, Ticky Fullerton. Ticky, thanks for joining us this afternoon. Just look at the screen here. Is the market technically closed now, and what was the damage?
Yep. Technically closed. It got worse and worse towards the end, I think. By the time we reached the end, $58 billion wiped off the exchange today. So 2.9% down, and literally following Wall Street with a big part of it. We've got this inverted yield curve now, which touched that inversion between the two.
Explain the inverted yield curve to me, Ticky. What's that?
It means that your bond yields, when they're further out, are actually yielding a lower amount. So the curve is the line's going that way than your bonds, which are only at 2 years, and that is seen as a sign of bad times ahead. That you cannot get the sort of returns further out, and in fact, some people would say it's an indication of a recession coming. Now, it's rather tricky to follow that logic, because really growth and the bond market have sort of decoupled. Certainly in the United States, you've got 5% nominal growth, and the thinking is that these bond markets are really looking at more the sort of negative rates that you're getting in Europe now.
I was looking at US growth
bizarre
today. Growth's come off, but it's still around 2.1%. In the US, so, not great, but not recession either.
No, and so there's two camps between the Cassandras and those that think this is actually not recession territory. And an inverted bond, an inverted curve, actually it doesn't always mean a recession, but recessions in the past have usually followed. Recessions in the past have always had this situation before. So the causation is not quite in the right direction at the moment, which is good. But I mean, look, our market as well did rather badly because of our own jobs numbers, and that again is sort of counterintuitive, because unemployment stayed the same at 5.2, but the new jobs numbers, I think there were 41,000, largely full time. People thought great, and then the market thought, well, what does that mean about whether this cut in interest rates is actually coming soon? And people have been taking a step back on that, so the market sank on that, and we did actually quite badly compared to the rest of Asia there.
So, and which stocks in particular copped it the hardest today on the Australian market?
Do you know, right the way across the board, they really tanked. And I think, interestingly, we had two companies report today, big companies, Telstra and the NBN. And Telstra's share price, however, is one of the very few companies that bucked the trend. They went down, but only by 1.8%.
Well, tell me about this, because you've sat down today with the bosses of both Telstra and NBN, a busy day for you amongst tech chief executives. Tell me about, let's start perhaps with Telstra.
Yeah.
Andy Penn, I've seen some reporting about his pay packet having a healthy jump, but that's not necessarily been the story in terms of Telstra's own profits.
Well, that is true, and Andy Penn, he's been driving this very big campaign of cost cutting, and people have been rather cynical about this T22 strategy. But it did actually come in ahead of schedule, his rate of cutting. The market likes that, and I think that's one of the reasons why it was, he got a good response from the market. But equally, he did actually point out that they have been losing. $2.5 billion was the impact on earnings, was the impact from the NBN and squeezing margins. Have a listen.
The reality is that the government's decision to effectively renationalise a significant part of Telstra's business means that structurally about a third of our business migrates to the NBN, which didn't exist previously, and obviously we're responding to that. So how we're responding to that is essentially a combination of two things. One is to double down on our core business in mobile, in data and IP, our technology services business, and we're starting to see those improve for sure. And then, of course, the second is we have to completely restructure the organisation and reduce cost to offset the fact that that is happening, and we're making good progress on that.
Yes, so they're losing revenue, they're losing business as Telstra customers migrate across to the NBN. But the other ding-dong that's been going on in the last couple of weeks has been NBN's high wholesale prices that it is charging Telstra and other service providers in the market, which has put a lot of pressure on Telstra's margins. Now, when I spoke to Stephen Rue, who is almost a year into the job at the NBN, he said, well, you know, yes, there will be issues with pricing, but he too has to deliver a return for the government. Here's what he had to say.
Well, it's important as well that NBN is profitable, and I'll tell you why. Because NBN needs to have strong revenue streams going forward so that it can continue to invest in the business, continue to invest to provide great operational business on behalf of customers, and has cash flows that it can continue to invest into the business.
Yes, David, and when I pushed Stephen Rue on whether he would do something to bring these wholesale prices down, he was very unwilling to engage, I have to say. So it is obviously a big negotiation at the moment. Thank you.